What are irredeemable preference shares, and can an Indian corporate issue such a kind of a preference share? Hello everybody, I'm your learning partner Sushila Hariharan, and if you're interested in a career in investment banking, trade life cycle, OTC derivatives and global financial markets, do subscribe to my YouTube channel. Today we're going to explore the concept of preference shares and a very unique type of preference share, redeemable preference share versus irredeemable preference share, which is often taught across commerce colleges and accounting courses in the country. So let's talk about it. A preference share is a share that offers a fixed rate of dividend by the company to the investors, and the rate of dividend is predetermined at the time of issuance of the preference share. So how is it different from a bond? It is different from a bond because the dividend that is paid by the issuer to the investors is after payment of taxes, but before payment of equity dividend. So in the pecking order of payments, you have first bond payments that are made out, that is the coupon payments. Then you have taxes that are paid out. Then third is your preference dividend, and finally your equity dividend. So preference shares will be denoted like 17% preference shares of ABC Limited, which basically means that every year the company will be paying 17% of par value to the preference shareholders by way of dividend after making the payments of interest and taxes. So thus it acts like an equity instrument because it is paid post-tax, but because it is a fixed rate of dividend, it is also sometimes misunderstood to be some kind of a bond, but it is not a bond because preference shares do not have any collateral that is attached to them. Okay, unlike bonds which have collateral backing, preference shares do not have any collateral. Then we come into the different types of preference shares, and then we come across this term called as redeemable preference share and irredeemable preference share. A redeemable preference share is one which can be redeemed by the issuer. That is, the preference shares has a maturity date, and on the redemption date, the investor is supposed to surrender the preference shares, and the issuer will then credit the investor's bank account with the proceeds of the preference share. Okay. Irredeemable preference shares means the redemption doesn't take place. There is no maturity for the preference shares. In India, this is not allowed. All preference shares that are issued by companies to investors are by nature redeemable preference shares. And in fact, we also have a clause which says that redemption has to take place within the 20 years. Okay, so the maximum maturity for a preference share or a redeemable preference share is 20 years. So this is to safeguard the interest because the preference shares are not very popular in the stock markets, and they are not traded as aggressively as, let's say, the common stock is. In fact, if you look at common stock volumes, it must be more than 10,000 times that of preference shares. We have such few listings, so the investor into the preference shares doesn't have any exit option and must therefore consider exiting the investment only through this particular route, which is the route of redemption, that is surrendering the preference shares to the issuer and getting the par value back. Therefore, in most markets in the world, investors' rights are also considered by completely not even allowing irredeemable preference shares. Okay, so that's redeemable and irredeemable. Irredeemable doesn't exist in Indian markets. The redemption also for redeemable preference shares cannot happen more than 20 years of existence. If you like the content on my videos, do subscribe and also let your friends and colleagues know so that they can also get an opportunity to learn much more about global financial markets. Thank you.